Hey, everybody, welcome to a podcast called Risk Intelligence. And today I'm doing something different. I am going live, impromptu, no scripts, no agenda, no nothing, just an in-depth conversation about insurance with Warren King, who is a GC here in New Jersey, general contractor. And Warren and I know each other for several years now. And when we were in Vegas at a business convention, we had some really in-depth conversations about insurance. And he is a GC who just loves insurance. He just loves to talk about all the different topics, coverage, and why you do and why you don't do certain things. So we said, you know what, let's do a podcast and just have a sit back conversation and just shoot the breeze and talk insurance. So I hope you enjoy it. We're going to try to keep it simple, and we're going to look to do more of these. But today we have a couple topics, and we're just going to have an open conversation, no script, no nothing. So I hope that you enjoy it. But before we do, Warren, why don't you just say a little bit about yourself?
Sure thing. Thank you, Karen. So I am a real estate developer and builder. I build mostly urban area redevelopment and infill lots, and I've done this for my whole life pretty much. I'm a real estate broker as well, and I work in the cities in New Jersey.
All right. So we're going to just get right to it. One of the topics that we're going to talk about is the New Jersey contractors credit on your workers' comp policy. And what I'm going to do is we're just going to talk and, just a little conversation and such. We got to get on the screen here. So
what is this credit you talk about?
Sure. So what it is that in the state of New Jersey, if you have certain classification codes on your workers' comp policy, then the state of New Jersey allows you to take a credit on that payroll if they meet certain requirements, meaning you have to have employees that make a certain amount an hour or above. And if you have that, then the state of New Jersey uses a sliding scale, and they will reduce your workers' comp coverage to give you a credit for those class codes. And there's probably about 30 different class codes that are out there. And some of them are as simple as the carpentry class, the masonry class, and such. I don't want to talk out of line, but I do have a list of all the different class codes. And what happens is that when I have a client who is in the contractor world, I see what their workers' comp policies have as far as class codes. And if they have any of the class codes that apply for that New Jersey contractor's credit, then we go to the next step and say, okay, what is their hourly rate? And do they meet that sliding scale? And if they do, then you will get an additional credit on your workers' comp policy.
And when you say credit, you're talking about a dollar discount.
Absolutely.
Right? So they're going to save money.
Absolutely. Yeah.
And are there ever class codes that are misclassified by insurance companies?
Absolutely. One of the most common ones that are misclassed is 5437, which is the carpentry class. And then also sometimes the 8810 for the owners of the contracting business. And yes, I understand that the owners are just overseeing, they're managing and such. But as soon as they step foot on the field, most insurance companies and the auditors look at that and say, okay, you're on the field, but there's a good chance that you're going to pick up a hammer or you're going to move a ladder. And as soon as you do something like that, they're going to put you right into that contractor's class code instead of the clerical class code. So it's really tricky. The other thing is maybe you have a guy who works for you and he's multi-talented. So he can do some painting, he can do some trimming, and maybe he can do some tiling. He's a jack of all trades. Then what happens is the highest class code, the highest rated class code is where all that gentleman's salary usually goes. So you can't take, oh, Bobby, he makes $30,000 a year and he has 3 responsibilities. You can't take 10 and put it into this class code, 10 and put it into that class code, and 10 and put it into the other. They're going to have to take that whole 30 and put it into the highest class code, even if he only did that job for 1 day. So it's like a minefield when you're working with workers' comp and the auditors and the insurance carriers. You have to be very, very diligent about it. What's really, really important is keeping track of your payroll, because that is what dictates your premium when it comes to workers' comp. The more payroll you have, the higher your workers' comp premium is going to be.
Because your workers' comp is based on how much someone's getting paid.
Correct.
Your employee.
Correct. Yeah.
So in my case, I don't have any employees.
Right.
So I basically work with subcontractors.
Correct.
And I rely on their workman's comp policy and get their certificate to cover me.
True. But sometimes your subcontractors don't have workers' comp either. And that becomes a challenge, because now you're trying to get a sign off on a big job and they're asking you, because you're the king of that job. They want to and you're the one with the sub. So they want to make sure that you have workers' comp. And if you're an LLC and you have no payroll, then you can be exempt from workers' comp in the state of New Jersey. But in the meantime, you have subs who are doing the work for you. So what I do is I communicate with my contractors and say, okay, you're going to need this to meet the contract that you're trying to get a job for. And you know that the guys that you're hiring are not getting workers' comp. So in order to protect yourself, one way that you can do it is, instead of paying them, let's just say $30 an hour, find out the rate for the class code that they're doing, and then deduct that from their hourly rate, maybe bring it down to 25. And now you can get workers' comp for them because you're absorbing the cost.
Understood. We have an LLC,
Mm-hmm.
and we do not have payroll. So we could be exempt, but it's safer for us to have workers' comp in case one of our subs doesn't have it. Then if there is an incident or something that needs coverage,
right,
they can rely on our workman's comp.
Yes, and what you just said is a common statement that most contractors say. Why do I need workers' comp if I don't have any payroll in my subs, etc.? In the court of law, if you ever had an incident and you were in front of the judge can still view it as you as the employer and your sub as the employee, because you are giving direction. Once you're giving direction, then yeah, it's more of an employer-employee relationship.
I understand.
I had a situation once, a client where it was a homeowner and he hired a contractor to do some work. And they didn't have to replace the roof, but they had to get up on the roof, a low roof. It wasn't, a high roof, but a low roof. And the guy fell off, and my homeowner was sued because the GC that he hired did not carry workers' comp. And then the sub that he hired, who was on the roof, didn't have workers' comp. So my homeowner was left on the hook. And the reason is because he's acting as the employer.
Do homeowners know to ask for workman's comp when they hire a contractor?
If they talk to their agent.
So
yeah,
the answer is no.
Yeah, it's a hit or miss.
Yeah,
it really is.
I've never heard of a homeowner asking for workman's comp. A lot of times they're concerned about price and what work needs to be get done, but they don't really talk about the insurance and what's, required or even just safe for them to think about.
True. In the last person that they're going to call when they want to renovate their kitchen is, let me just call my insurance agent and let them know I'm upgrade. I mean, that happens very, very little. So you find out after the fact. The agent usually finds out after the fact.
Now, obviously, from what you mentioned, you have clients who are homeowners, but you also have clients who are contractors, right? That you're helping them to get a workman's comp policy. Have you had incidents where a contractor might not be able to get workman's comp?
Absolutely, I have.
Why would that
be? Because what happens is most standard carriers want at least 3 years experience or pre-existing workers' comp in place. So if you don't have that and you don't meet those qualifications, then you have to get it through the state. The state is the last resort, and the state is usually, they'll charge you the same rate as a standard carrier, but they'll also tack on an additional fee, usually anywhere from 10 to 20% on top of the normal premium. So I'll give you an example. Let's say you have a painter and he has 3 employees and they're all painting. And that painter has never had workers' comp before, and he's a brand new entity. No insurance company is going to take them because they don't have any pre-existing experience. So in that scenario, my only option is to go to the state. However, if you have somebody who had insurance, but maybe they have a lot of claims, then the carrier, a new carrier, is not going to take them because they have too many claims. So in that scenario, you have to go to the state. And what's really bizarre is that, let's say I go to Hartford Insurance for a guy, a painter, and I get declined because he doesn't have the years of experience, or maybe he has too many claims. So you get rejected, and then now you go to the state, and the state says, okay, yep, we're going to give you insurance. The state actually tells the insurance company, let me rephrase that. The state actually assigns the insurance carrier to take on this risk. So they can actually go to Hartford and say, give Warren insurance. So it's really bizarre, but it's a different division of Hartford.
I've heard of assigned risk.
And that's basically what it is. That's basically what it is. So if you had Hartford in a building and you had somebody who is experienced and no claims, you can have a workers' comp with good division of Hartford, and let's just say it's $1,000, and then you got the bad division, the assigned risk division of Hartford, that might be, I'm just throwing a number out there, $1,200, because that $200 is, you need insurance, so we're tacking on a fee. So that's
risk
how,
premium.
Yeah, it's a tricky, it's not one size fits all with workers' comp. You have to kind of maneuver and know the situation to find the best fit.
What are some of the biggest issues that you come across with contractors that come to you for workman's comp that really create a challenge in them being able to get it?
Paper GCs. Insurance companies do not like paper GCs because they are basically delegating everything. They're subbing out all of their work. And the way that they look at it is that you have all these people out there and you have no control. So what I have done in the past is, that's proven to be successful, is you find a PEO. A PEO is a professional employers organization, and basically it's an aggregator. It's a company that, how can I say that? It's a company that takes on all the paper GCs and makes one policy. So then now the insurance company looks at it and says, oh, okay, instead of us having just one paper GC, now we have 20 paper GCs. And you're not just getting workers' comp insurance, and it's still the same rate. You know, it's all rates are governed by the state. But what a professional employers organization also gives you is they may be able to handle your payroll. They may be able to handle your human resources section of your business. And they may even give you another type of policy called employment practices liability. And that is insurance to protect the employer in the event that an employee has an issue with the employee, such as Me Too many years ago, sexual harassment, unfair treatment, why are you getting paid more when I've been here longer? Any kind of employee disgruntlement with the employer. So when you are a part of a PEO, you may get that coverage as well.
And what is that coverage called again?
Employment practices liability coverage. Every employer should have it. And even though you're a great employer and you treat your employees great, you just don't know. You got to protect yourself. Again, you get general liability to protect yourself for the work that you've done and for third party. Why not protect yourself from the employees that might have a problem with you? So that is what that coverage is about.
I had an instance where a subcontractor could not get workman's comp insurance because they went through an audit and didn't expect a very high bill based on the audit, so they couldn't pay it and they lost their coverage.
Yes, and audits they're the necessary evil. And what happens is real life situations where you get an audit, you're not able to pay it, the policy cancels, and then you try to get coverage someplace else. The new carrier I don't want to say will not, but should not offer you coverage because part of the application process says, have you ever been canceled or had audit issues with your prior carrier? And as soon as you say yes, what they want is what's called a zero balance letter. They want to make sure that your audit is up to date and paid with your prior carrier before they take you on as a new carrier. So you have two choices. One, you pay the audit, or two, you're out of luck and you don't have workers' comp. And even if people say, well, let me create a new LLC or a new corporation, and then no, because that's also part of the application process. Have you ever had any other entity or subsidiary affiliated, and then you got to say, yes.
I understand they also have a database that they can search.
Oh yeah, absolutely. Everybody has access to that. That is New Jersey Crib. You can go out there and you can see me as an agent. That's how agents sometimes get new business. They're looking to feed their pipeline, so they can go to New Jersey Crib and just type in, I'll just say AVE, and any employer that has AVE will come up and you're able to see what their expiration date is. So if I was looking for more workers' comp business, I can go to that site, I can type in a parameter, and then it tells me, all right, here's the X date. And then let's say your expiration date on your policy is August. I can start soliciting you in April and just kind of craft an email. Hey, I understand, have you ever had any problem? Did you look at this on your policy? I can help you save you money, and they're trying to get in and do that. Yeah. So have you ever heard of an experience rating mod?
Never heard
of that?
No.
So an experience rating mod is also part of the workers' comp rating factor. So what happens is when you start a business brand new, first year, you will always be at 1.00. And then every year that you have your coverage, if you do not have any claims, then it goes down. Maybe after the first year it's 0.98, and then the second year it's 0.96. For every differential between the number and 100, that is the amount of a credit that you will get. So if you have a 0.9 mod, you should be getting a 10% credit on your workers' comp. Why? Because you're a good risk factor. You don't have any claims. You're running a sound business. But let's say you have claims. It goes the other way. 1.02, 1.04. Let's say you get to 1.10. Well, guess what? Now you got to pay 10% more than the norm because you're not running a sound practice. Carriers, their threshold, I would say, is probably 1.2. And if you have a mod that is greater than that, they're just not interested because they're just getting baggage. So there's a lot of little moving parts.
Yeah, I've
with
never heard of
workers.
this credit, and I've never had a claim.
Oh,
but
yeah, you should be,
How do they take that into consideration? Because maybe I'll call and say, oh, how much is my workman's comp? And they say, oh, it's X amount of dollars.
it's
But
on
then-
your policy. If you look at your policy, there's a section at the bottom of the policy that has a lot of different numbers, and there's different codes, and there's one that'll actually say experience rating mod, and you'll see it 0.86, 0.90, and it's public. They're not hiding it from you. Now, the other thing is that's really neat is insurance companies, they want workers' comp. So the way they try to get us as brokers and agents to give them the workers' comp business is they say, we'll give you 25%. 25%. So I have clients who have a really good history of workers' comp, and I'll go to the underwriter and say, listen, can you give me a 25% credit? And then they'll look it up. They'll make sure you're paying on time. You got no claims. You know, what's your history? Yep, we'll give you 25%. Done. Just like that.
Does it get affected anyway by changing companies? Does your rating go back to 100?
No.
So it's something that carries on whether
Yeah.
you're with Hartford
Or travelers. The key is you don't want to move it midterm. You want to move it on your anniversary date, because the experience mod is based on a whole year. So if you change it midway, you're kind of messing up that algorithm.
Interesting.
Yeah. So
What can someone do who had an issue with workman's comp, and let's say they had an audit, they had an outstanding bill they couldn't pay, they pay the bill off, where do they end up, and what are like some good suggestions for somebody to start over again? Because there are guys out there that I've seen who just don't get the insurance again.
Right.
And I'm assuming that doesn't help everybody because there are less guys in the pool now.
right. What I tell my clients is be realistic with your payroll and your projections. Yes, every business, new business wants to say, yep, I'm going to make $1 million next year, right out of the bat. But be realistic, because premium is based on revenue. Well, I'm just talking not just workers' comp, but overall general liability also. Premium is based on sales and payroll. So when you're starting out, just be realistic. Don't try to fluff it up and broaden your shoulders and such. It's okay to be lower, because I just did this recently. I told my client to reduce his revenue by at least 500,000. I said 500,000 is not going to make or break the premium, but it is going to make it higher. Keep the money in your bank account. And then this way, next year, when you get audited, if you really did do that 500,000 plus, great. If you didn't, at least the money was in your bank account. So, and you be realistic. You don't go, oh, I'm going to make, get in your head, you're going to make 3 million and then you only put 750. Don't do it that drastic, but within reason, it's okay. Even payroll. What's my payroll going to be for all my admin staff? Oh God, it's going to be 300,000. You know what? Maybe go in at 225. Go in at 225 and let the audit tell the story. Because you're going to hire people, you're going to fire people, and maybe at the end of the day, it comes out to 230. And then you let the cards tell the story. I say it all the time.
Right.
Yeah. So, but yeah, that's a lot of insight on the workers' comp subject.
I have one other question for you.
Sure.
The most recent changes in the home improvement contractor licensing, used to be registration, now it's licensing, is requiring liability insurance, workers' comp, and bonding, right? So are you seeing people that are not being able to qualify for that stuff?
I have seen the general liability is straight up. I mean, that's a given. You can get that. As far as workers' comp, I have written letters for my clients saying that they are an LLC, and they are exempt because they have no payroll. That letter has worked. When it comes to the bonding, there are 3 limits to the bond, and it all is based on your revenue. It's like a tier, like a 3-tier, and it can range anywhere from, I believe, $100 for the bond. I think the second tier is $250, and then the third tier, I think it's about $500. And it all goes based on what your revenues are going to be. And don't quote me on it, but I'll just say if your revenues are $100,000 or less, then a $10,000 bond is needed. If your revenues are from here to here, then a $75,000 bond is needed. So what we do is when we have contractors coming to us for the home improvement, we send out an email and say, okay, what is your revenue going to be? And then they tell us, and then we give them the bond based on that. And they've ranged anywhere from, like I said, about $100 to, it's either $500 or $750, but it's not an expensive, and it's a very simple process. It's an email, couple questions, and then that's it. We hit a button and you have the bond.
Sometimes people get scared when they hear the word bond,
Mm-hmm.
because there are different types of bonds, right?
Mm-hmm.
What are the different types of bonds that are out there, or you may deal with?
Sure. So there's a bid bond, there's a maintenance bond, and there's a performance bond. So basically a bond is basically you are warranting and guaranteeing that you are going to finish a job. And a bond has an obligee, and the obligee is the person you are doing the work for. So instead of getting a policy to say that you're going to finish the job, they get what's called a bond. And if you are to fail on that job, at least that bond is going to pay for the failing of and walking away from the job. That's how the home contractor bond came out. What was happening is that there were contractors out there who were doing work for a homeowner, and then they weren't finishing the job and they were leaving, or something went wrong and the homeowner couldn't get a hold of the contractor. And then the homeowner would call the state and say, listen, I hired XYZ contractor. He was supposed to do my bathroom, and now I can't get a hold of him. And, he's licensed. He said he was licensed, but he didn't do the work. And, what do I do? And the state wants to help these people, but they had no pocket to reach into to get it. So now with all these complaints, the state said, okay, let's put a bond process in place. And now that is where the home contractor fund came about. So now that homeowner can call the state and say, XYZ left the job. Oh, okay, wait, hang on. He just renewed his license. Yep, he's got a bond. It's $50,000. So what's he owe you? Boom. And now they have the money the recourse to help that homeowner finish his job.
So that would be a completion bond.
No, that is different. Yeah, this is a license and contractors bond that they're referring to. But I mean,
but it does act as a completion of the job.
I could see where you're saying that. In my world, I don't refer that as a completion bond. A performance bond is more, in my world, a completion bond. A performance bond is basically saying that you're going to do what you said that you were going to do, and you're going to complete it to its entirety. And then a maintenance bond is during the upkeep of a situation, you want to make sure that they're doing their job, so they have a maintenance bond. Usually pavers and road work guys get a lot of maintenance bonds.
So what are the 3 types of bonds again?
A bid bond. So let's say you have a job out there for the town or the city, and you want to bid on it. You want to see if you're awarded the job. So they'll give you a bid packet, and they'll say, okay, give us all this information and give us a bid bond. And that bid bond is basically saying, yes, I can do that work. If I am awarded the job, then we're good. That is a bid bond. And then you have a maintenance bond, which is during the process of, and then you have a performance bond. And then now you have the license and permit bond with the state.
So it's actually a fourth type of bond.
Yep.
Interesting.
I mean, the way I think of it, yes, four different types of bonds.
Very interesting.
Yeah, so.